Ever had those days where it feels like every trade you take just hits your stop loss, one after another, bam, 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 like the market is out to get you? It's frustrating, discouraging, and can make you question everything. But here's the thing, even the best traders in the world go through a losing streak. The difference, they know how to handle them. In this video, I'm breaking down exactly how to deal with back-to-back stoppages without blowing your account or losing your confidence. Let's get into it. Let's be real, taking multiple stop-outs back-to-back feels brutal. It can shake your confidence, trigger frustration, and lead to destructive behaviors like revenge trading or abandoning your strategy. But here's the thing, losses are part of the game. Even professional traders with proven edge takes losses. The key difference, they don't let their emotions dictate their actions. It's not about don't have any emotions when trading, we're all humans after all. It's about how you manage the same that matters. So how do you stay mentally strong when facing consecutive losses? Number 1, shift your mindset. Losses are data, not personal failures. A losing trade isn't a reflection of your skill. It's just one outcome in a larger probability game. Think about a casino. The house doesn't always win every hand, but over time, the odds are in its favor. As traders, we need to think the same way. Instead of focusing on individual wins or losses, zoom out and ask, did I follow my plan? Let's pause right here. I know most of you here are new to trading. When I say have a plan, most of you don't even know what that means. It's irresponsible for me to just be cliche about it and just move past it. So let's dive deeper. What does having a plan actually means? Number 1, your setup. What you trade and why. Before placing a trade, you should be able to answer, what am I looking for? For example, is it a breakout and retest? Is it a VWAP bounce? Is it earnings gap up? What am I looking for? What conditions must be met before I take a trade? What time frames am I using? For example, I only trade stocks that are gapping up 5% or more on earnings and holding above the anchored VWAP on 5-minute chart. If a trade doesn't meet these conditions, you don't take it. Number 2, entries and exit rules. When you get in and out. A common mistake new traders make is guessing where to enter and exit. A plan should define an entry trigger. What specific signal tells you to enter? Example, price reclaiming the VWAP with strong volume. Stop loss. Where is your trade invalidated? Hint, it should be based on structure and not emotions. Profit targets. Are you aiming for 2 hours, 3 hours, or more? What is it? Where is your profit-taking targets gonna be? For example, entry. Buy when the price reclaims the VWAP on increasing volume. Stops. 1 ATR below the VWAP target. 3 hours, for example, risking $100 to make $300. Now, you're not making emotional decisions mid-trade, you're following a system. Number 3, risk management. How much you risk per trade. This is where most new traders go wrong. Without a risk plan, one bad day can wipe out weeks' worth of gains. Here's a simple formula. Never risk more than 1% of your account on a single trade. Aim for at least 3 hours on winners. As mentioned before, risking $100, your target should be at least $300. Position sizing. Adjust your share size so your dollar risk stays consistent. For example, if your stop loss is $2 away from your entry and you're risking $100 per trade, you can buy 50 shares. If your stop loss is $1 away and you can buy 100 shares, this keeps your risk consistent no matter the trade. Now the last part of planning is review process, learning from the wins and losses. Every trade, win or loss, is data. Best traders review their trades to spot patterns. Ask yourself, did I follow my plan? What went right or wrong? Would I take this trade again? This makes you refine your edge over time instead of making the same mistakes over and over. So what's the bottom line on all this? Hey, bottom. Alright, let me stop. Hope what the plan means makes sense right now. Now let's shift back to the topic. Sometimes, even after having all these plans, trades just don't work out. What to do then? This is where number 2 steps in. Control emotional reaction. Avoid revenge trading. One of the biggest mistakes traders make after consecutive losses is trying to make it back immediately. This leads to impulse, high-risk trades which often make things worse. Here's how to stop the spiral. Easier said than done, but try it. Pause and breathe before taking another trade. Reset your emotions. Accept that stop-outs happen. Goal is to protect the capital and stay in the game. If the emotions are high, step away. Sometimes the best trade is no trade at all. Understand the nature of probability and variance. Even with a 60% win rate, you still will have a losing streak. Probability says you could have 4, 5, or even 6 losses in a row before hitting a big winner. What matters is that your winners are big enough to make up for these losses. That's why position sizing and risk management are key. A simple mindset shift. Instead of fearing stop-outs, embrace them as normal part of trading. Set the trading rules to stay disciplined, to protect yourself from emotional trading. Example, if you hit 3 stop-outs in a row, step away. Stick to your strategy. Don't start taking random setups. Focus on executions and not the outcome. If you execute well, the results will follow. Your job isn't to avoid losses. Your job is to manage them like a professional. By shifting your mindset, managing emotions, and trusting the probability of your edge, you turn trading from a frustrating grind into a long-term game of skill. Now let's talk about solutions, because just accepting losses isn't enough. You need a game plan. What to do? Take a step back. When you hit multiple stop-outs, pause. Walk away from the screen for a bit. Reset your emotions before taking another trade. Review your trades. Pull up the charts and ask, was it a problem with the setup or just market conditions? Did I size too aggressively? Was my stop placement correct? This isn't about beating yourself up, it's about learning and adjusting. Stick to proper position sizing. One of the fastest ways traders blow up after multiple stop-outs is by increasing their size to make it back. Don't do this. Instead, risk per trade should never exceed 1% of your account. If you're in a drawdown, even 0.5% risk per trade is a smart adjustment. This ensures that even with a few stop-outs in a row, your capital is protected and you stay in the game. Focus more on risk to reward. Make at least 3 Rs on the winners. If you're risking 1 hour per trade, your winners should aim at least for 3 hours. That means if you risk $100 on each trade, your profit target should be $300 or more. Here's why this matters. Even with a 40% win rate, a 3 hour still makes you profitable in the long run. It prevents the need to force trades after a few losses. It reinforces patience because you know that when the right setup comes, it can make up for the multiple stop-outs. Reduce the size and build up the confidence. If you have taken multiple losses, cut your position size in half. This reduces the emotional pressure and allows you to trade with a clear head while regaining the confidence. Last and the most important thing, know when to stop for the day. If you are on a tilt or emotionally exhausted, step away from the markets. One of the best risk management tools is simply knowing when to call it a day. Overtrading is how a small drawdown turns into a blown account. Hope this video was helpful. If you did, well, feel free to check out the Patreon, link is down below in the description. As always, take high probability trades, manage the risk wisely. I'll see you guys in the next one. Bye-bye.